X can do a small trade plan. Now is 10 past 6. Market has now opened for the month and the new US equities week. Alright, we just be going through the S&P. I might touch on oil and see what's going on. Alright, what I have up here is a 4-hour chart of the slash ES is the running chart. So make sure that your quote's reading right on your particular contract, which is the nearest highest volume contract. So what we're looking for, we have a bearish open. I'll show it on the 50 minutes, so we're going through the 4 hours so you can get a bird's eye view. So what we're looking for is more or less an overnight bounce of 32s to 34s. I have my entry set at 32s, just for looking for easy bounce, looking for 7 points to 8 points on the bounce, which will bring us back to the open. So let's go to the 15-minute chart, which is the analysis chart. So I have placed my levels we're looking for. So we have a deviation sitting at 34.5. We're looking at 30s to 33, 34 is to enter. So if you look at the difference, you could enter at 32. The break and make risk, so your risk to reward would be 7.25 points. It's for the overnight session. Also it's for the day session tomorrow, based on my vol calculations. We know it have a lot of news coming out and stuff. The market hasn't fully opened as yet. Japan would be opening in an hour and 45 minutes. So we just gonna set up could use a one contract trade since it's Sunday night. If you're just looking for a one contract, more than likely that is the strategy I might use tonight. So 10.25 on the stop loss side to go up to 9.25 on the TP side. For your max reward, which is simple rotation. So that we're looking for the rotation, we're looking for overnight. So the market now open. Alright, so you can see the gap down. You're just looking for more or less push to the downside and gap fill, return to open. So if you're looking for a push to the downside during Japan and then bounce to the upside. So that's more or less where we have. We're looking at major buys at 17s to 20s for tomorrow. I'll go to the day chart for that. Open up the chart. Look at where we have closes and where we could have a lockup. So this is the node for the 30 right here. You can see there's day chart. That's a doji. Yeah, in the region of 30 to 34. If it hit the base, comes fills the gap. Well, fills the price we're looking for and look for the bounce to the upside. Major buys at 17s. You can see high volume nodes. Alright, so more or less that is it for that. But we're looking for an economic calendar for top 5 things to look at. What's going on with the trade war, NFP will be this week, and that is Draghi, ECB stuff, and Trump visiting the UK, which is not something I want to get into here. Yeah, and the Australian central bank stuff. So what we're looking for is a bearish open, small bounce to the upside. Then we might be looking for in the morning. We might be looking and see what's going on in the market. Trade small, trade smart. This was short and sweet. Let's me find what's the price of oil. We into the 53s again. We open at 53, which is no surprise to anybody. Oil been crashing for a little while now, since last week. We had a very very bearish week. So make sure look at what you're trading at closely. If you're looking at 1 days singles, you're looking at that 50 number. 50 will be your support level for this week. So 50 would be right here. 50 10s, 50s. Be very careful if you're buying oil. Do not buy oil right now. When you buy on big dips, 50.22, 51.22 is your first opportunity, and the 30 years will be your first opportunity to see some bullish movement back or price return. What you look for in oil is 50 to 60 points with a maximum and 30-point risk. So 51.30 would be call for tomorrow, and 50s. Other than that, do not buy. Look to sell on the return of volume, which is your high node, which is 53.36, which is yesterday's close. So be very careful on trading oil. Very high volatility expected. Lot of moving parts. So hope you guys been trading small, trading smart, and make sure and do the basics right. Okay guys, bye.